Okay, so these are the biggest mistakes I've ever made in trading, and this is why I made those mistakes. This is an honest video, and although I don't lose like $20,000 in a day, you know, $1,000 losing day is a lot for me. $500 is a lot more than I want to ever handle in my life. It's a loss nonetheless, and there are a lot of lessons that we can all learn from, and I would like for you to write below in the comments what your biggest mistakes are. But these are my biggest trading mistakes. Okay, so the first one is trading based off instinct. I'm looking at the market, I'm looking at where the price is going, and I say, wow, you know, this is great. This looks like a great opportunity to get in. Let me get in here. And boom, I lost. So when the price moved fast in my opposite direction, it created a strong feeling of FOMO, and I reversed my position only for the price to go the other way. At times, I would reverse once more, and the price would reverse. So let's say I'm long, and then I see the price going against me. Okay, instead of getting out of the trade, right, I would say, whoa, this price is going to continue going against me. Let me reverse my position and follow the price down. Now, sometimes reversing your position is good. Most of the time, reversing your position is a good thing. However, you need a good reason to reverse your position. You cannot reverse your position just based on the price is moving against me. Can't do that, because now you're going against yourself. Now you're betting against yourself and the reason that you even got in the trade in the first place. So, for instance, if the price is moving against you and it hasn't crossed any moving average lines, if you haven't received any indications, if your indicators haven't gone off telling you that, hey, we're actually reversing and heading in the other direction, if none of that has clicked, if the only thing that you're looking at is the price moving fast against you, do not reverse your trade. It needs to cross a barrier. It needs to cross the lows of the day, the highs of the day, the moving average lines. It needs to cross an indicator, Andrew's pitchfork, whatever you use for an indicator, a pivot point. You do not enter the trade just based off, do not reverse your trade just based off the price moving against you. It is one of the biggest mistakes ever, and it is exactly what they want you to do, because you know what they're going to do? They're going to bring the price right back. So in order to avoid this, right, see this over here. The above mostly happened because I was not trading on candle close. So even though I am trading on 5-minute candles, I was actually trading on 1 minute or 30-second candles, not 5 minutes. So what would happen is that, let's say I entered at 1,000 even, and I said, okay, I'm going to exit this trade if the candle closes at 1,001. Well, what would happen is it will go up to 1,001, and I would say, wow, I'm gonna get out of this trade. I'm gonna reverse my position because it's going up. It's passing 1,001. But the candle didn't close on 1,001 or above. So in actuality, I'm not trading 5-minute candles. Or if you're trading 30-minute candles, you need to trade on candle close, not on the price touching. It needs to be the close of the candle, because otherwise you're not trading on 30-minute candles or 5-minute candles or 10-minute candles. You're trading at whatever they want to do it, however high they want to pick up the price. Of course, you need to have a stop loss just in case of emergency, but more likely than not, if your candle does not close below or above your stop, you should still be in the trade. So this is the cause of most of my losses. Bad days. I would have saved so much money by waiting for the candle to close rather than trading based off where the price touched. These market makers and the market participants are experts at taking your stops. They know where the moving average lines are. They know how to read the Elliott waves. They have it all. They have all the equipment you can think of. And they will go and take your stop and then continue moving in the direction that you initially traded on. So it's a big lesson to learn. Okay, I was not mentally prepared to trade due to previous bad days. Now, when I had a few bad days in a row or was having a horrible week, I did not prepare myself mentally to trade. I should have taken a vacation for a week or two until I felt ready again. When I returned to trading after a 5-month rest, I did pretty good. It does not have to be 5 months, but at least a week or so. Okay, if you have a bad week, there was a period where I was doing really bad in trading, and it wasn't so much because I sucked. It was more because the strategies that I had in place were not completely perfect, and I made the mistake of putting cash, trading on a cash account on those strategies, and lost a lot of money because the first day I made $700, the second day I made $800, the third I was doing pretty good the first 3 days, and then the storm hit and I wasn't doing so well. So whatever the reason is, other times it's been my fault. I've lost a lot of money because of it's my fault. I'm not mentally prepared. So every morning, just before you go to trading, just prepare yourself mentally and go over all your rules. Okay, that's preparing yourself mentally. And if you have a bad week, or if you have a bad couple of days and you're feeling like you're in a bad mood, or if you're feeling bad because of your losses, you have to take a vacation. You got to take a couple of days off, a week off. You cannot trade while upset. You can't do it. You almost have to be a robot. Does a robot get upset? Does your algorithms get upset? Do your trading algorithms get upset? Do your trading bots get upset? If you would kick a DVD player, would it yell at you? If you change the channel on the TV when it's a good show, does the TV have an opinion? No. That's how you have to think. You're a robot. You have to think almost like a robot. Follow your rules. Yes, there is some common sense leeway, but very small. You have to follow your rules. And if you have a bad day, if you're feeling bad, if you have any sort of emotion, something happened in your life, you have to take off a couple days. You must. Okay, it doesn't have to be extended, but I've extended my layoffs to 5-6 months at a time, and it's been really good. I came back with a vengeance, and it's been really, really good. So that's one thing. It's another mistake, number 2, that I made. I didn't follow any indicators whatsoever, no indicators which I had worked tirelessly polishing. Okay, I have a lot of indicators. Okay, this goes back to number 1. Although I had so many indicators running and so many moving average lines, I sometimes would enter a trade based on nothing but a feeling, and it was going to move in one direction or another. This was the cause of some of the biggest losses in my career. Okay, I have a lot of indicators that I have back tested. I mean, really, really, really back tested, where one of them is right about 89% of the time. Really, really back tested the indicators. And when I say I mean hours and days and weeks and of computing power, of time, because these things take time to back test. I'm talking about months. And sometimes I would look at the screen and say, you know what? What a great trade. Let me go in and trade. And forget the indicators, not saying anything. It's probably, just having one of its days today and not activating. It's human to do that. and I went in and I traded without any indicator guiding me, and I lost. And I lost. Some of the biggest losses was caused by these indicators, by not following my indicator, by not following anything, just saying, oh, well, the price looks like it's going to go down. So, we gapped up. It closed below the line, some line that I made up. Let me go. Let me take it. Let me go down with the market. Okay. Strategies automated and not performing at their peak. And the last one is, I had strategies set up, automated strategies, but I failed to watch them trade live. If you watch your strategies trading live and you wait till the end of the day, you're going to see that a lot of times you miss a lot of enter and exit opportunities. So if you have a strategy, just follow it for about 2-3 weeks before you really invest in it, and go over and just polish these strategies, because a lot of times, even though they look good on back testing, there are things like, for instance, I have a strategy that closes at 3:45. It closes trading. It finishes trading at 3:45. Now, yesterday, it closed at 3:45 at a loss. Had it gone till 3:50, okay, it would have been a win. I would have been up $350 or more for the day. But because it closed at that loss, I was only up $150 for the day. So what I did was just push it an extra 5 minutes, and then I noticed, wow, all these other days, if I would have just pushed it 5 minutes forward, I would have been up. And the strategy performed after that. It performed about 30% better. I actually got an increase just by raising the exit by 5 minutes. So things like that. Just go over your strategies, and that's pretty much it for the video. I hope this video helped some of you out there. I know trading is a little tough. Trading is tough, mentally, extremely mentally tough, mentally taxing, and this is for you out there. Thanks for watching. Subscribe. I have a bunch of videos. I took a couple days off because I was sick, and yesterday I traded. I didn't put any videos up, and today I traded a little this morning, and I'm gonna see if I can put that video up. But happy trading. See you soon, and remember to subscribe.